Welcome back, traders. Today we're building on our previous discussion about the moving average, MA, and exponential moving average, EMA indicators. We'll deep dive into their significant differences, adjustments, and practical values before unveiling an amazing combo strategy to help you with your entries and exits. Buckle up for this exciting ride. First things first, let's talk about simple moving averages, SMA or MA, and exponential moving averages, EMA. SMA is calculated by taking an arithmetic mean of a set of data over a specific period, basically an average, giving equal weight to each data point. On the flip side, EMA is a weighted average favoring recent data points, reducing the significance of older data points. As we increase the values or periods of our MA-EMA, the line of the indicator becomes smoother, reacting slower to price changes. That's why we use both MA to determine longer trends and EMA as our quick responder to momentum shifts. The SMA and EMA are invaluable tools in technical analysis. They help identify trends, movable support and resistance levels, and generate trading signals depending on the strategy and time frame. So, we've understood the two major types of MAs and how to adjust their values. Next up, we reveal the winning combination of MA and EMA, but before that, remember, always test in demo accounts. Ready for our super combo trading strategy? Here are some conditions and setups to keep in mind. Ensure there are no significant market events. We recommend testing strategies in demo accounts for beginners. Identify a trend. Many traders fail by overcomplicating with unnecessary indicators and fancy tools. Keep it simple, up or down. Let us know if you would like to see an episode dedicated to identifying market trends in the comments below. Set several MAs and EMAs. Use a 150 or 200 value MA and 30, 50, and 100 value EMAs. The MA tracks the long-term trend, while your EMAs detect smaller changes. Think of MA as your grandfather, slow and steady. Your EMAs are the rest of your family, quick to react when something happens. When big news hits, your MAs and EMAs are ready to respond. Watch for waves. Markets move in waves, and it's crucial to identify them correctly. When your EMAs start crossing each other, be prepared. Remember, trading success comes with proper guidance and time. We're just scratching the surface here, but stick with us, and you'll master advanced techniques and combos. Stay tuned for the next video, drop your questions in the comments, and remember to test these strategies in demo accounts. Happy trading, everyone!